It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Wednesday, midweek edition of the show. Hope you're having yourself a great day. Also, a big shout out to everybody listening out there on the RealAg Radio podcast. Okay, we got a fun, full show here for you today. We're going to try to squeeze everything in, or at least as much as possible. We're going to talk about the markets with Brian Voth of IntelliFarm. He is based in Manitoba, Canada. We're going to talk to Brian today about what he thinks about the recent, somewhat of a bounce in the markets, and how does that relate to farmer confidence and farmer outlook on the markets, as we've been talking about in our Canadian Farmer Sentiment Index. We'll also hear today from Sarah Healy. She is with Stratus Research, and we're going to talk about farmers' use of biostimulants in both Canada and the U.S., and how is that changing over the past number of years. And finally, our third guest will be Justine Hendricks. She is the CEO of Farm Credit Canada. And Farm Credit's making a bit of a shift, a change in their risk profile. They're going to be involved in working directly in the arena of ag venture capital. And they have done a fund-to-fund model in the past. We'll talk about what that is. But now they're going to be going direct. And we got a new competitor in the marketplace, and we'll talk about the why of that and what does it potentially mean for innovation in the country, as well as commercialization of some of those ideas that entrepreneurs have. We'll also have a very short period of time, I'm imagining, for the top ag news stories of the day. If you have any feedback on today's show, well, it's easy. You can send me an email, shaney@realagriculture.com. You can also find Real Agriculture across all of the social media platforms, or I would love if you called the Real Ag feedback line, 855-776-6147. Okay, let's stop right there. Let's take a break, and when we come back, let's get into the market conversation with Brian Voth of IntelliFarm. You're listening to RealAg Radio, Rural Radio 147, Sirius XM.
Peter Johnson at WheatPete, RealAgriculture.com, and what an opportunity! Oh my gosh! You think you can't grow better wheat? You are absolutely wrong. We're going to show you how to strive for those record wheat yields that they get in the UK and in New Zealand. You can grow 150 bushel wheat. I'll show you how.
Catch WheatPete's Word every Wednesday on RealAgriculture.com or download the podcast on iTunes or Spotify.
I am Lindsay Smith. Joining me now is Rob Meyer for Genesis Fertilizers. We can't have this conversation without, of course, an update on where the Genesis plant is at as far as plans.
An announcement, many probably know this, was recently made to expand the production capacity of the nitrogen plant in Belle Plaine. You know, a plant with the capabilities to provide not just urea, but also urea ammonia sulfate, the UAS, as well as the DEF, that's the diesel exhaust fluid component, with future plans now in play to install the equipment and also produce UAN. So if you really think about it, that package, these upgrades are not only going to make the plant more flexible, I think that's a key ingredient, but more profitable for the farmer owners. We're entering the spring. Farmers are thinking about their businesses, their crop plans, their fuel, their fertilizer. We're right in the mix of it right now with, incredible experts, and we're pushing this project. It's a great time to be on board.
And Rob, for those interested, where can they go for more information?
Visit us at genesisfertilizers.com.
And welcome back to Real Ag Radio. Envita bridges the nitrogen gap all season long, enabling your corn crop to fix the nitrogen it needs from the atmosphere when and where it needs it most. Let Envita set your crop up for success by requesting it from your local retailer. Well, let's talk the markets here on Real Ag Radio. And right now we are joined by Brian Voth of IntelliFarm. Hey, Brian, how's it going?
Hey, Shaun, I'm good. How are you?
Pretty good, man. Hey, you enjoying those NBA playoffs?
Yeah, other than the lack of performance from the Mavs on the last game. That was a little embarrassing.
Mm.
Who shoots 50% from the free throw line?
Yeah, that's not good.
As a team.
Shaquille O'Neal. That's who does. Maybe not even that good.
Yeah. But I mean, as a team, like, you miss 12 free throws or whatever and then lose by 4. That just sucks.
That really hurts.
Yes.
That hurts.
So tonight's another night. We'll see where we go from here. But
let's talk about the markets here. We if you look across the spectrum, I'll call it, we have kind of bounced off the lows.
Quite a bit, actually. Yep.
Yeah, exactly. So I guess we could cover the why of that. And I think more importantly, what do we do now? And how do you see the outlook here as we get this 2024 crop planted?
Well, if I can stick with the basketball analogy, the bounce that's just happened here, don't miss the free throw. This is a great opportunity for getting old crop cleaned out and also adding new crop sales. And I fear that a lot of people get sucked into this thinking that, oh, well, now we're rallying and now we're going to go back to, $16, $18 canola or $11 wheat or whatever. Throw whatever number you want in there. And I would just really caution against getting too bulled up right now, because the fact remains, the balance sheets, for the most part are not tight. There's a couple of individual crops that are, but for the most part, the balance sheets are not tight. Canada, US, globally, and this run has been short covering by the funds, which they have bought back a pile of positions in the last couple of weeks. They had some pretty massive short positions by the end of February into March, and they have reduced most of those to almost even, maybe small short positions, maybe small long positions on a couple of commodities here as of end of last week. So this is not a fundamentally driven rally. And that's the concerning part to me, because if it's not fundamentally supported, it's just been technical, then a lot of the times those rallies die just as fast as they went up.
You look at the last 3 months, corn, let's use Dees corn as just one example, but a lot of commodities are following this pack. We're up 36.5,
yep.
which feels pretty good. Would you be more focused on the 23 crop clean out than worrying about 24 if you have both of those to deal with?
No, I think it's both. Well, I think they go hand in hand because the timing would be the same anyways. The bigger thing on 23 is you're running out of time. And this is working off the premise that you want the bins emptied before new crop comes in. But if that's the case, you're down to the last couple of months. And keep in mind, a lot of buyers have coverage all the way out to new crop already. So it's a time thing, but also the fact that demand is getting mostly covered. So if you don't find an opportunity to sell stuff and move it here over the next couple of months, it may get dragged into the new crop side. But from a timing perspective, we are right into the window here where seasonally markets tend to peak and drop off going into the summer months. Like mid-May is oftentimes the end of the spring rally. Sometimes it can last into June, but if there's not major weather issues, and yeah, I get that it's been raining down in the States and, corn planting is a little behind the 5-year average. Soybeans are just marginally ahead, but it's not enough rain that those acres are not going to get planted. And then you go back to the rain mixed grain analogy. So you've got solid moisture for that crop now. And I don't think it's an issue of whether the acres get in the ground or not. There's not that much rain. It's not flooding. So at this point, it's been construed as a bullish thing, and I think was led to the funds buying back their positions. But that's what it's been. It's been a technical rally based on rain in Brazil, based on rain in the Midwest. And I don't think it's fundamentally supported.
You and I were texting yesterday about our Canadian Farmer Sentiment Index results for April and the outlook on selling crops. Do you think it's a good time to hold your inventory or to sell your inventory? Kind of get a bullish, bearish comparison there. The index in April bounced back higher, but into the positive territory at 117 out of 200. Back in January, it was 95. We're essentially back to where we were in October, which was 115. What do you make of how much that has bounced around?
Well, and I think you and I talked about it. Like with that sentiment index, you could overlay grain prices onto this, and it follows that very, very closely. And it brings to mind the whole everybody's the most bullish at the top and bearish at the bottom idea. When things are going up and whatnot, everybody's in a good mood. Everybody's got this. When things go down and it doesn't go the way guys planned, well, then it's like, well, now what do I do? Like, now I'm not sure, and indecisiveness starts to rule, and Maybe panic sets in a little bit for certain things. And yeah, like I think it follows the markets very, very closely, which is, I think, totally normal and makes total sense. But I just get a little bit worried about the fact that, again, we're not fundamentally supported to have higher prices. And some of these commodities have dropped. You know, if you go back, the 2014 to 2020 highs, corn already dropped back to those lows already once. So did Chicago wheat. Kansas and Minneapolis have been close, but we haven't quite gotten there. Canola and soybeans have never even come close. So to me, the biggest risk is on oil seeds, actually, that we end up dropping quite a bit more yet by the time we get to harvest or into the end of the year. And one particular note, I don't know if you saw this or not, but there was last week, Karen Brown had it on Twitter that looking at new crop soybean exports out of the US, well, they're the slowest pace in decades. And the fact that there has been zero sales to China on new crop US soybeans, that's a bit of a concerning stat when you consider the fact that the balance sheets are penciling in record demand levels for new crop soybeans. So what is already not a tight balance sheet could get even more abundant yet. And now you start talking about all these tariffs and whatnot that they're throwing in on, if China decides to retaliate by not buying more soybeans, well, that balance sheet could get maybe not to 2018 levels, but not supportive.
Is there a point here where China needs to buy U.S. soybeans, though?
Well, not as long as they can keep buying out of South America, but it just makes the situation even worse here at home then, from an oilseed perspective.
What do you make of, on our Canadian Farmer Sentiment Index, we also measure confidence in marketing crops. And I've often said that whether you think the market's going up or down, you need to have a plan. You need to be confident in that plan. And that plan can change based on what happens. But, you know, do you have confidence in your marketing plan? And except for 2 months going back to September of 22, all of the months except for 2, we have been in negative territory. Farmers not feeling a negative confidence when it comes to their marketing plan. In April, we are up to 85, which is off the all-time low of 75 back in January. What do you, when I tell you that farmers' confidence in marketing crops is 85 out of 200, what do you make of that?
It's a disappointing statistic, I guess, in a way, because, you know, there's a whole book on this. Grain marketing is simple. It's just not easy. And it does become a lot easier. And I know I've harped on this a lot when we've talked, like, you have to know the numbers of your operation, and it takes a lot of the guesswork out of it. If you know that, hey, I need $12 canola to break even. And if I can sell $14 canola or $15 canola, I'm penciling in a nice profit. You're not aiming for the high. And unfortunately, I think way too many people are still hung up on this. I need to hit the high. But the problem is with the high, you don't know what the high is until after it's happened. And then it's very hard to hit that after the fact. So
there's no derivatives in retrospect, unfortunately.
No, at some point or another, if I can figure out how to market in reverse, this is going to work out really, really good. But until then, you know, you have to look at your numbers and know, where am I actually building in a profit, and not get into the whole, farmer thinking of, oh, I sold $14.50 canola and it went to 15. Oh, I lost 50 cents a bushel. No, you didn't. And until you've sold 100%, you should always hope that the price goes up. It's way easier actually pricing into an uptrending market than a downtrending market. And if you're still at a profit at $14.50 and it goes to 15, well, guess what? You're just at a bigger profit for 15. The biggest thing is being disciplined and actually pulling the trigger, and not getting the deer in the headlight looks and like, oh, should I price? Should I not? And not knowing where your numbers are, especially now. And obviously a lot of things have changed in the last 2 years, with interest rates being a huge one, obviously. We've had some pretty frank conversations with clients this year that, given where we still think markets are going to in the next 6-7 months, breaking even on some commodities, and I'm talking breaking even across all costs. So we include like land opportunity costs on land that's owned, like the fact that you could rent it out and make money doing that. So we want to cover that off, covering off depreciation, covering off all these non-cash costs. Is it breaking even may be considered a win in 2024. The 30, 40, 50% ROIs that we've had on some crops in the last few years, that was fantastic, but it was the anomaly. This is not normal. 10%, 15% ROI, that's a normal ROI long-term in farming. And it's easy to have forgotten that over the last couple of years.
Yeah, I found it interesting that future farm financial performance, for the first time since we started doing this, going back to September of 22, is higher than current farm financial performance, both in the negative. One's, current is 85 at a 200 and future is 87 at a 200. So I think farmers are seeing that. That tells me farmers are kind of seeing that kind of a year, whether they like to admit it or not. They're seeing that, maybe that is a win, break even.
Yeah. And that's why I say, like, I don't want to sound like super negative or whatever, but it's just the reality that breaking even to, a 10 or 15% ROI is going to be a real win this year. I think it's not enough fundamental backing at this point to push us to higher prices. And keep in mind, like the last time this cycle happened from 2010 to 2013, we had super high prices. We came crashing down after one good year, and we went sideways for 6 years from 2014 to 2020. So now I think after, we've had 3 years of running of prices up and back down, we could very easily settle into a sideways range at these levels. Unfortunately, I still think that canola, we have not found the new low on canola yet, which is probably more like $12.50 a bushel ish, which nobody's going to want to hear that. But
I don't want to hear that. And everybody should nobody. I don't want to hear that.
I don't want to hear it either. But I think there's no point in, closing your eyes and just hoping for the best. You may as well go into this with eyes open.
Well, with some of the rains we've had in the past 3 weeks, production numbers looking a little bit better as well, for sure, for a crop like canola.
The drought maps have changed substantially, both in U.S. and Canada. So it's good from a production perspective, maybe not so great from what it means markets might do.
Hey, Brian, really appreciate you joining us here today on RealAg Radio. That is Brian Voth of IntelliFarm. Hey, Brian, thanks a lot.
Thanks, Shaun.
Hey, we'll be right back on RealAg Radio. When we come back, we're going to talk to Stratus Research and find out about how farmers in Canada and the U.S. are using or not using biostimulants. You're listening to RealAg Radio, Rural Radio 147, Sirius XM.
Hi, it's Bruce with Ag Direct Hail Insurance. This season, Ag Direct Hail is proud to support prairie farmers by taking the unprecedented move of keeping our crop hail insurance rates at or below 2023 prices. With the many challenges facing farm families, this is our way of thanking producers who work hard to put quality food on our table. You have our back, and Ag Direct has yours. Visit agdirecthail.com or call us toll-free. We appreciate your business.
Canola is more than just a pretty face in the prairie landscape. It's a big business, both here and around the world, that requires you to be informed and up to date on everything it takes to grow a successful crop. The Canola School on RealAgriculture.com has an expert library of video resources covering markets, agronomy, and more to help you grow a healthy and profitable canola crop. Visit canolaschool.com today. Brought to you by BASF Canada and Invigor Hybrid Canola.
You want to use PGRs in your cereals, but no time for a separate pass? Manipulator PGR can be applied as early as one tiller. Just add it to your herbicide to reduce lodging risk, increase harvest efficiency, and maximize yields. Talk to your local retailer for more information, and make sure you confirm acceptable tank mixes. A lot of interest out there in Canada and the U.S. when it comes to biostimulants, but are some of the attitudes and perceptions and the use of them changing in comparison to past years? Here to break that down, based on a new piece of great market research, is Sarah Healy. She is a market research manager at Stratus Research. Sarah, great to have you on the show here.
Yeah, thanks, Shaun. Great to be here.
Okay, so I guess before we get into some of the attitudes and the behaviors, from a use standpoint, are the use of biostimulants in Canada and the U.S. on the rise?
So looking at trends from 22 to 23, specifically in Canada, it looks like use was the same as it was in 2022. So about 23% of the growers that we spoke to in 23 said that they were using a biostimulant, which was almost exactly the same as use back in 2022. A little bit of change within categories. We saw a bit of a drop in the number of people using the nitrogen fixing category, but overall use was pretty stable year over year.
Okay, how about in the US?
In the US, a little bit less. Bit less. Yeah, not a significant drop, but slightly lower in 23 versus 22 in terms of use. Yeah.
Well, and maybe we should back up a little bit. How many categories are there?
Well, that's the thing. I mean, we at Stratus, or myself, I put them into the categories of nitrogen fixing, which I think stands out on its own because it's such a big category. Beneficial bacteria and fungi, the protein hydrolysate, amino acid, plant extracts, and organic acids. That's how we've separated them. That's by no means the only way that we can dice this. There are other categories that aren't included in there, like PGRs or biochemicals. But in our studies, that's the way that we've broken it down. And that's, I think, what brings a lot of uncertainty to the category because there's so many different products and different ways that you can slice this. So, yeah.
Yeah. Any indication, is that slowing at all? Because I agree, there is a lot of different companies in this arena. Are we tapping out yet on new entrants, or is it still growing?
I think it's still growing because there's all of this innovation that's going into combinations of ingredients, right? Like I've mentioned those categories, but a lot of the time you'll have a biostimulant that has multiple of those ingredients in one, so they don't neatly fit into one category or the other. You'll have an organic acid combined with a seaweed extract or a protein hydrolysate. So there really is no limit to the innovation there where companies can keep testing different combinations of ingredients to come up with a different product. So.
And how do growers feel that biostimulants are performing in the field? Did you measure satisfaction?
We did. Yeah. So I think the one thing that we saw this year was that attitudes are improving. We can see that. We can say that compared to 2022, there's more positive attitudes toward the category, but satisfaction is still much lower compared to traditional crop inputs. So when we look at the satisfaction or the number of growers who are saying they don't know, or they give it a neutral rating out of 5, is still much higher compared to some of the more traditional crop inputs like a corn herbicide or a soybean fungicide. So there seems to be still this gap in performance versus expectation for these products amongst growers. There's a lot of uncertainty in the category that we still haven't moved past that. I think we've moved past the snake oil era of biostimulants where growers understand the value of this technology. They're no longer questioning, the validity of the science, but they're not seeing the performance in the field that's going to prolong their use and their commitment to these products over the next 2, 3, 5 years.
And is yield the ultimate piece of measurement here that growers are using?
Well, from hundreds of studies that we do at Stratus on crop inputs, we know what matters most to farmers is performance, however that's defined in a given market. So, they're going to be looking for yield, they're going to be looking for that performance, but because of that gap and what does that performance look like, because they're focused on ROI, a lot of the people who are using these products are new to biostimulants. And so, you get that nitrogen fixing category where growers are looking at this product and they're associating the nitrogen with yield. And then when they use that product and they're not seeing that yield bump that they typically see associated with nitrogen, they're not going to be happy with the performance that they see. So it's sort of like, are we going to have to wait until the product performance from the companies improves, or are growers going to have to start adjusting their own expectations of what performance looks like in the field or what ROI looks like to them in the field?
In meeting with a lot of companies in this biostimulant arena, the word consistency comes up a lot. Is that, it's not that they don't work or they don't produce the results that, growers are looking for, it's the consistency that seems to be a bit of a missing piece here. Is that what you're finding in your research?
Yeah, and I think it's, a lot of the messaging surrounding the best time to use one of these products can be confusing, because with a biostimulant, not all applications at all timings is going to be the best scenario. And so I know a lot of companies have these two options. I keep going back to the nitrogen fixing category just because it's such a big one, but you have the option of reducing your nitrogen fertilizer and maintaining the same yield, or keeping your nitrogen fertilizer the same and getting that yield bump. And so there was that option there. And from our research, growers are saying, yeah, they're not ready to reduce their nitrogen fertilizer and rely on this technology. There's too much risk there. But now some of the companies are saying that without reducing your nitrogen fertilizer rate, you may not see the consistent yield bump that you would, right? Because if there's no limiting factor, if nitrogen isn't the limiting factor, there's only so much that the bacteria can do. And so it's a little bit harder where something like a herbicide, it kills a weed. It's very consistent, right? You can see the performance year over year. Whereas sometimes with a biostimulant, even, a seaweed extract or an amino acid, it's going to perform better when the crop is under stress or when the conditions are not ideal, when there is no limiting factor, right? So you're right. It's much more difficult to see consistent performance if it varies when you should or shouldn't apply some of these products, which is kind of similar to fungicide applications, right? You're not always going to apply a fungicide. So,
yeah. Any indication how we see in both Canada and the US, there's some incentive programs for growers to, and I'll fixate on nitrogen fixation here, because both governments are trying to get farmers to potentially, they're focused on fertilizer emissions, right? So are those incentives driving growers to at least attempt to try some of these products?
Are you thinking more like carbon credits, or are you thinking like the
financial incentives, like basically some of the cost of the product being subsidized?
Yeah, so we ask. So that's one of the questions that we've asked in our research, whether or not your confidence in the product would be impacted if you had that yield guarantee from the company. And yes, the majority of growers are saying yes, it would increase their confidence, but I think it depends on what the yield guarantee is, because a lot of times it's work, right? You have to make sure that you've got, your yield monitor going, and it's very specific what you have to do in order to get that financial compensation. And sometimes it's product that you get back, not money. So I think that sometimes is a deterrent. But I do think that it helps increase the confidence in the grower to know that the company is saying, yeah, I'm going to stand by the performance of my product. And so we do see that. It's just a matter of, leaving a check strip and making sure that you're actually following through with what you need to do to get that yield guarantee back. So,
of course, across a lot of these categories, everyone's focused on corn. Because that's what happens in our industry. There's 90 million acres of it, and there's a lot of money flowing into it.
Yeah.
But there's a lot of other crops that are grown as well. As you look at the uptake of use of biostimulants across the different crop types in Canada and the US, are some crops faring better than others when it comes to the use of biostimulants?
Well, the use of biostimulants, really started in specialty crops, and that is where you have the most experience with growers who've been using these products for several years, and why we see satisfaction slightly higher with something like an organic acid or a seaweed extract in these specialty markets. There's more opportunities for application. There's more opportunity to get into the field and see those results. So that and the expectation there, because some of these specialty crop growers have been using these products for so many years, they know what to expect in terms of plant health and crop stress tolerance. But I would say, yeah, corn seems to be the major crop where we're seeing that shift into broadacre. So yes, we do see use on wheat. Yes, we do see use in soybeans, but soybeans are a little bit of a different beast because you've got your nodulator and the other beneficial bacteria that have been used and those inoculants in soybeans for so many years. Potatoes is another one where we see a lot of use of biostimulants and a lot of success, especially with the nitrogen fixing category as well. But I think that lately, it has been corn that has been such a focus.
It's a very exciting category. When we measure expectation versus satisfaction, obviously were the growers' expectations reasonable, right? So I wonder if over time we do see adjustments in and some of this is the fault of maybe some of the companies trying to get attention, making large promises on what they have seen in small trials. But talk about that in terms of the grower's expectation and how that shifts over time, and how that could possibly change or close that gap over time.
Yeah, and I think it is both. I think that, we can't put all the onus on one or the other. Yes, a lot of the companies have made some pretty big claims about, cutting your nitrogen by 40 pounds and getting the same yield and not really seeing that reality in the field. But yes, growers do need to likely adjust their expectation to bring it to be more in line with what the product actually has to offer. And when we do our research, we do a segmentation of growers to see if growers are thinking differently about their decision to use one of these products. And you see these three buckets that form this group of growers who are focused on, as long as it's convenient to apply, I don't have to make an extra pass through the field, and it's low cost. Yeah, sure, I'll do it. Then you have the growers who are really focused on ROI. They're thinking about these products in a very traditional way. They're thinking about them the same way that they would think about their herbicide or fungicide. But we do see a segment of growers who are thinking about this from a more agronomic perspective. They're focused on things like plant health and nutrient use efficiency. And so that's sort of the category of growers where you're going to be able to start to narrow that gap between performance and expectation, because their expectations there are more in line with what the product has to offer. They're interested in a product that could help to improve nutrient use efficiency. So they're more likely to then adopt that product. And not to say that yield's not important. Across the board, across all three of those segmentation of growers, ROI is always going to come to the top. But it's the other benefits that they put more emphasis on, where you do have those group of growers who are focused on those benefits and what the products can offer.
Well, it's a very exciting category. There's obviously a lot of funding going into it and research going into it and product development, and pretty exciting times in agriculture in Canada and the U.S. when it comes to the biostimulant market. So, Sarah, thanks for joining us here today. Really appreciate it.
Yeah, thanks. Thanks very much, Shaun. Thanks for having me.
That is Sarah Healy. She is Market Research Manager with Stratus Research. You can find more information by going to RealAgriculture.com. When we come back on RealAg Radio, we're going to talk to the CEO of Farm Credit Canada about some more risks that FCC is about to take on in the ag venture capital space. You're listening to RealAg Radio, Rural Radio 147, Sirius XM.
It's summertime, and you've got a lot of important decisions to make when it comes to your corn crop. Let the Corn School on RealAgriculture.com help guide you through those big decisions with input from leading experts in the field. If it's spray timing, disease identification, or any other field issue, the Corn School's got you covered. The Corn School on RealAgriculture.com, brought to you by BASF and Pride Seeds.
It's now time for a product spotlight, joined right now by Lauren Cummin. She's the Director of Policy at Seeds Canada. We're going to talk about a very important topic, and that is seed regulatory modernization. What needs to happen from your point of view?
Well, right now, Seeds Canada is talking and has been talking for quite a while about the need for balanced, refreshed governance in the seed regulatory system. To allow us to keep pace with innovation, our framework needs to allow for continuous improvement. An independent advisory committee will not only provide a framework for consultation, but it also provides a balanced governance structure that reflects the modern seed sector today. And the sector is concerned that rather than focusing on these bigger picture pieces that are going to get us to where we need to be, we're focusing on minor edits to what we already have, and in some cases, proposals to even go back in time. We really want to see a return on investment for everyone's time and resources going into SRM, and we want to be able to compete moving forward.
This time of the year when Peter Johnson and I are talking about agronomic issues on the Monday show, a lot of times we talk about emergence and how critical that is to achieving yield at the end of the day and getting off to a great start. Well, Vatterstad is partnering with Canadian farmers for outstanding emergence. Their line of tillage, seeding, and planting equipment offers solutions for all soil types, field conditions, and tillage practices, helping you to maximize yield. To learn more and to find out some of the details and contact your local dealer, you can visit Vatterstad.com. Joined right now by the Chief Executive Officer of Farm Credit Canada is Justine Hendricks. Hey, Justine, how are you doing?
I'm pretty good. How are you, Shaun?
Pretty good. It's been kind of wet
I know.
in the east. What's
I know.
going on?
I know, but some of that wetness went to the prairies, and that's a super good sign. So I'm not complaining. I'm sure you're not either.
Amen. Not at all. It's nice to see some green hills around here. Absolutely.
I can, for sure.
Okay, I wanted to talk to you today because I wanted to get a better understanding on the shift that Farm Credit Canada is currently under. We heard about this pre-budget, and it was definitely made, I guess, a little bit more clear in the budget, but I think there's some stuff to dig in here. When we talk about FCC taking on more risk,
Yep.
what does that actually mean?
Yeah. So I guess the last time you and I spoke was when it was a Future Food Conference, right? Yeah. And, we laid out there kind of some of our commitments we had in terms of renewed focus on the industry. But before I get to the budget, Shaun, I just want to reiterate one thing that I think is super, super important. It's to remember for the last 60 plus years where FCC is operated, we've been the dedicated lender to the primary ag and food industry, full stop. And that's not changing, period, right? So what we've been embarking on in the last year and supported by some of the announcements in the budget is this recognition we've consulted across the country with clients, stakeholders, you name it, in terms of as the needs of the industry are changing, whether it's because of different weather patterns, whether it's the required investments because we know we require more innovation, we want to continue to improve productivity. What does an organization like FCC do in order to continue to play the role that it always has? So that's kind of really where it starts. And that's why that shift that you're talking about, maybe what I'd say instead of a shift, it's an expansion, because what we've always done isn't going away, which is being that senior secured lender there to make sure that we're there when our customers across the value chain are looking to operate within this amazing industry. Okay, so what is this expansion then? Where is FCC diving into now in the financial space that maybe you weren't previously? Yeah, no. So I think we talked about it a bit the last time, but it was early stages. For one is we've been for the last, 15 years doing a bit of venture capital, and we've put in over $500 million, but it's been from a fund to a fund, right, that we've invested. One of those changes or that expansion is now we're going to start going direct into the ecosystem. So doing some private equity. We're not going to do it all on our own. We'll have partners alongside in order to do it. But that'd be an example of this expansion that you're talking about. And again, it was as a result of stakeholders across the country saying, listen, FCC, you can play a big part in helping the ecosystem at all the different stages of companies, particularly on the innovation side. So why don't you come on board and expand beyond what you've been doing fund to fund? So that's kind of an example of something that's going to be different that we didn't do before. So does that mean that in the pre-FCC doing this, is there a lack of venture capital then? Are you backfilling, or there's a void here that you see, or why say, hey, FCC, it'd be great if you participated here? Yeah, no, I think there is. So void, or I'd say there's a need to have more players at the table. There's lots of data that shows that, if you put in a couple of factors, right? Combine the need to constantly innovate, which this sector is known for. Combine the need for improving productivity, which I'd say is a Canadian thing, but that also applies to the sector. Combined with a need that we're a net exporter of the goods we grow in this country, and we want to continue to keep that position. In order to do that, and in response to some of the new realities with different weather patterns, there are some pretty significant dollars that are required to continue to support this industry. That's where, hey, FCC, you've dabbled in some areas of it. It'd be great if you were a bigger player amongst other players in these different spaces. So that's how we're expanding some of the product suite that we currently offer.
Any specific focuses? Is this about ag tech and productivity, or is this about processing? You know, I know the food side of the industries. You've talked, yourself and JP Gervais and others have talked a lot about that space. So where are the focuses?
So when we did our research in terms of identifying in the market where was the greatest need, one of the conclusions we came to, Shaun, is probably we need to be involved in all aspects of it. The challenge we're going to have is we can't do that from day one. Right. So what I would say is first is we're going to start doing things in partnerships, because we know that there's funds out there that do some really cool work. So going alongside them and going directly and leveraging their strategies is going to be step one. We basically need to build out the team, quite frankly, get the capacity, and then we'll be able to start to operate at the different levels. I also want to add, Shaun, I think it's worthwhile for your audience. So there's private equity, but there's also different forms of capital, right? Whether you talk about sub-debt and others. And over time, that too, as we recognize, is probably needs to be part of the suite of what we have to offer. Very much over, I'll say, the next 12 to 24 months, we're going to want to build the skills in-house to be able to really deliver on that. But over time, you'd probably see us involved in all stages.
So what are the KPIs, the key performance indicators here? What does success look like for Farm Credit Canada in this space?
I'd almost think that you've been talking to my head of strategy before, where you and I having this chat, Shaun, and she's looking to test me live in front of your audience. Listen, I'll tell you two things, Shaun. One of the KPIs is how much capital we can deploy. Full stop, right? Okay. And you talked a bit about the budget, but the ability for an FCC to deploy more capital in some of these spaces is definitely one of the KPIs. But without going through the details of each and every one of them, if you allow me, I'll just take one as an example in terms of how we're thinking about it a bit differently. So one of the areas where we definitely want to put more investment is in young farmers, right? We know critical in terms of the transition. We all know kind of the realities of entering into the space is becoming more and more unattainable. So how does an FCC and others kind of have the right product suite to support them? So our definition of a young farmer is a farmer that's under 40, right? And up until now, we'd measured the success of it. And that KPI was how many more farmers under 40 does FCC support? I can tell you, we probably have the bulk involvement in the market. But as we were looking at the strategy and saying, hey, how can we really know if we're having the impact we want? Maybe what we need to look at is the farmer that was under 40, is he or she still farming at 45?
Right.
And you know what I mean? So that would be a KPI that we would start to want to look at, because, you could suggest that us coming in with capital is probably the easy part of the equation, more or less. But us being there for the long run and being able to say, hey, the dollar we put in 2 years ago has resulted in this customer remaining in farming, increasing the land that they farm, whatever it is, I think becomes a much bigger testament to where our impact is. So that's some of the KPIs that we're starting to think about. We haven't put them all on paper yet, but it's kind of part of that thinking that we want to apply. So I think we'll be in a better position to measure truly the difference that we make in this sector.
Yeah, and any investor they have a timeline in mind that they need to get a return from, right? And so there's non-patient capital and there's patient capital. And I don't want to put words in your mouth, but my estimation would be is that farm credit, in terms of how long it can take to get from concept to commercialization to truly scalability,
Yeah.
It requires patient capital. That is something that I think you would probably bring to the market that would be different than maybe some of the other players.
Yeah, no, it's you've done good homework, Shaun, and you got good experience. I mean, and that's where, if you look at some of the sister financial crowns, that's part of the reputation we build over time in the market is, yes, part of our job is to be patient, right? And to really work with those companies. I think if we go back to the private equity side on specifically as an example, I think with FCC and what's going to be part of the strategy is really making sure that we can be an active player in the ecosystem. So what do I mean by that? It's one thing to be there at the early stage for the company as they're looking to commercialize, right, or seed capital and so forth. But from a Canadian point of view, how do you support the tech company or the ag tech company that comes out of British Columbia to be able to go across the country faster? Well, FCC can be huge in terms of connecting that company to different clients that can actually test the technology, hopefully help it commercialize faster, hopefully then make that company maybe sell to other bigger, large Canadian corporates, which is, there's a lot of written material on that in terms of some of the challenges in Canada with Canadian tech, and then add the ag tech. So I'd say one of the differentiator we're going to have is we're going to want to play in both of those areas, not just supplying the capital, but if I may, helping that capital become successful.
Is this adding more competition in the market, or like, because some people may say, okay, whoa, hold on here. The valuations are more favorable in Canada versus some of the other geographies. Whoa, why do I need my tax I'm running another fund. Why do I need my tax dollars? Because FCC is a Crown Corp competing against me. Talk about that relationship and if somebody has that response.
Yeah. Now, first off is remember, FCC is a profitable corporation, right? So we do not depend on Canadian tax dollars in order to be able to do what we do every day. So that's first thing to remember. Second one is, Shaun, everything, all the thinking we've done into this, we haven't done in isolation. We've connected with the other players in the market. There's tons of stories and literature that supports that there is a gap. So I think to your comment or your question, even those that would suggest that, I think would recognize that there's huge opportunity in Canada and there is not enough capital that's going into these spaces. So we're coming into an area that is needed to have more capital. The second thing is, we were talking earlier about the patient capital element to it. It becomes part of how you build a transaction overall. So having players like us that sometimes will take on the additional risk at the early stage or stay in for longer, I think others will actually welcome that. And our goal isn't to eat at their lunch. On the contrary, we're kind of thinking industry at large, Team Canada, what do we have to do? And if we really want and believe, as I know you and I do, the success of this industry and its capabilities of what it can do, what we're about to do, I think will be a welcome addition.
Justine, thanks so much for joining us here today. I really appreciate it. I know you've got a crazy busy schedule, so I appreciate you fitting us in. Thank you so much.
I really appreciate it. Anytime, Shaun.
I think it's been kind of an interesting transition, and I'm kind of fascinated what the results look like here for Farm Credit as they do dive into doing direct ag venture capital, partnering with companies and institutions. She talked about the fund-to-fund model. This is more of a direct relationship. In talking to a lot of people in the venture capital space in agriculture, I've been hearing positives in terms of the reaction from this news and the team that's being built at Farm Credit on this. So it's going to be interesting to see how it all works out, and does it move the needle, so to speak, when it comes to Canadian innovation and commercialization. When we come back on RealAg Radio, we're going to get to the top ag news stories of the day right after this.
Choose Viatude fungicide and unleash best-in-class sclerotinia protection in canola and premium protection against white mold in soybeans. Viatude contains a powerful premix of Onmira Active and Prothioconazole. This unique combo delivers high-performance disease control, crop safety, mix compatibility, resistance management, and advanced mobility for excellent coverage and superior plant protection. Choose Choose Viatude fungicide for stronger, more vigorous crops.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomists, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomist with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
And welcome back to RealAg Radio. We've got a little bit of time. At the beginning, I said we have a tiny bit of time. That may have been a bit of an overstatement. Hey, this segment's brought to you by the new Oxbow cereal broadleaf herbicide from IntelliFarm. Oxbow is powered by duplastin technology that is it's a workhorse on resistant kochia and other tough weeds in wheat and barley. Make sure you go to newfarm.ca to learn more. Important news out from CFIA yesterday. The CFIA says it has completed testing of over 140 retail milk samples from across Canada and has found no remnants of the highly pathogenic avian influenza as of Tuesday, May 14th. Now, testing milk at the retail level is a reversal here for CFIA from an earlier statement less than 3 weeks ago where they said they were only testing milk from cows under suspicion of the disease based on symptoms. As a proactive approach to surveillance, CFIA is coordinating with the Public Health Agency of Canada to conduct enhanced testing of milk at the retail level to look for viral fragments of HPAI through the use of PCR testing. CFIA will be able to detect HPAI or fragments of the virus, even if the virus is not infectious. And of course, the key point as well to continue to be made and reinforced is the fact that pasteurization does kill the virus if it even was present in the milk, which I think is a very, very critical point that needs to continue to be emphasized. Farm kids are the next generation of farmers, and it's up to the current generation to keep them safe. This week, May 13th through 19th, marks the first ever Kids Safe Farm Safe Week hosted by CASA, the Canadian Agricultural Safety Association. And BSF is the presenting sponsor of that. Robin Anderson, Director of Programs and Communications for CASA, says that this week is all about encouraging farm families and farming communities to keep farm kids safe by raising awareness of both health and safety risks for children and youth on the farm. Stay safe. It's really important. It's a part of our culture to keep, have kids involved in farm activities, whether that's calving on the ranch or that is, through the growing season, but please make sure that you're putting them in safe situations for sure. And finally, we have news out of Morris and Rightway, and there's a new farm equipment brand based in Western Canada following the acquisition of Morris Equipment by Rightway. They've announced, Morris and Rightway have announced that the launch of a new parent company, Superior Farms Equipment Limited, is going to be the new company. So a quote here from the CEO, Cameron Johnson, who says, "We are thrilled to unveil Superior Farms Equipment and unify the companies to better serve our customers." If you have any feedback on today's show, of course, you can send me an email, shaney@realagriculture.com. I told you the news would be short today. We are also across all the different social media platforms. Name one, we're there. Paige Holmquist from our team does a great job of staying in touch with the entire social media community, with everybody that's involved with social part of the RealAg community. As well, you can send your feedback by calling the RealAg feedback line, 855-776-6147. Thanks, everybody, for getting real and getting connected with RealAg Radio, and we'll, of course, chat again tomorrow. Cheers, everybody.